All right, everybody, welcome back. We're going to talk about what happened on Friday and take a look at what happened in our past so we can see our future. So let's take a look at the charts and let's get an idea where we're headed and what happened and what's going to be happening. All right, so let's get a good idea here. Let's take a look and we'll figure this thing out together. All right, as always, we got to go. First up is always going to be the S&P 500. Now, we got to look back in the past, right? So if we look back at the beginning of this year, okay, the S&P was sitting at 6,148. Then it sold off to 4,835. And then from there, it pushed all the way up to 6,764. So if you had got in at the S&P down at the 4,835 and held one share all the way up to 6,764, you would have made $2,000. Okay, so that little pullback that it had on Friday, where it sold off. Let's see how much did it sell off? Roughly, what's that? About $500 or so. Roughly 500. Sold off $500. Okay, well you'd have gave back 500 out of the 1,500 you took home if you had got out at the top. Okay, so is that something to worry about? I don't know. It depends on how you really feel about it. Are you happy with 1,500 or are you sad because you lost 500? You know what I'm saying? I'm personally happy with the 1,500. So, you know, these little pullbacks, that little pullback, that's really nothing compared to where you could have been if you were dollar cost averaging, or if you had just waited till this thing hit what you thought was the bottom, because they put in a huge bar back here on what's that, March of or actually it says April 9th on my chart here. So April 9th, right, put in this big bar and never looked back, just kept running. So you could have been in that trade. You could have made $1,500, and you know you might have. And who knows? Maybe you might have picked the top and got out before Friday. You know, so they blame the president's comments. I don't know. Maybe somebody told the president, "Hey, say something," you know, that's going to shock the markets. Who knows what the idea behind the sell-off? But we know that they run the registers and the market is pulling back. Nice big bar pullback. Is that bar going to continue to sell off? We won't know until we head into the week, right? But we do know that that it's a good sizable bar. It took back a large chunk of what had came in as we made that most recent high of 66.19. Okay. So we took those out. So we may continue to fall back until this support area at about 63,000. Or not 63,000, 6,300. Excuse me. But anyway, you know, it blew when the S&P took off from back here in April of this year, right? It never even, when it blew through the most recent high at that point back over here in the first part of the year, it never even looked back. It didn't even redo a retest for some support. So it may be coming back to check the support, make sure this is a good support at 6,148 or 6,100. So you can't, be dwelling on this. We have to look at this as what it is. Okay, there was no retest at all of this area, support area. You know, we barely got a check back here when it after it left that 4,800 area. We barely got a retest back here. It only tested one time and it took off, right? And so those are the kind of things you got to keep in mind when you're in the market and you're investing in the market. Okay. Now if we take a look, let's keep going on with our chart, looking at our charts here. So we got Bitcoin. Bitcoin did another retest of that 123 area and failed. Okay. Test, failed. All right. Now we got to have another retest of this 107 area, most likely. If that fails, then we're going to probably come back down into here somewhere and maybe bounce up and then maybe fell again and come back to this 76,000 area. Who knows? But it looks like it is in this range that it's bouncing back and forth. So we got to keep an eye on that on Bitcoin. You got oil. All right, and this is a yearly chart, a year and a day chart. Okay, so each bar represents 1 day of trading, and the whole page is 1 year of trading. Okay, so looking at this, looking at oil is probably coming back down to retest $56. Ethereum probably come back down to retest this 3,000 area, depending on what Bitcoin does as far as it retests of its area. Okay. Before I had mentioned that Ethereum was kind of doing its own thing, but now it's kind of tracking Bitcoin again. So we have to keep an eye on Ethereum and Bitcoin because they seem to be working somewhat in tandem. All right, but we don't know when that's going to break. So currently, just keep an eye on the two of them. Next up is gold. Gold didn't hear nothing from the president. I guess gold doesn't listen to the president at all because it's still pushing higher. It didn't even make a move at all on that day. In fact, it went even higher. So, and let me quit saying the president because as far as I'm concerned, he had nothing to do with the market selling off. In fact, that looks like a bearish harami on the gold, so gold may sell off here in the next few days. So keep an eye on that. Next up is natural gas. Natural gas been selling off anyway, so it didn't really take a big hit. In fact, it slowed down at the support area. And it got this window open, so natural gas is probably going to continue to sell off and come back down here to this $2.85 area on that gas. The NASDAQ, nice big bar put in. Maybe coming back to retest this old support area that it never checked out. Alright, so we got support areas that haven't been tested. Alright, it blew up through here. This area here, what's that? At 23,327 on the NASDAQ, it blew up through, it left that area and blew through this other new, most recent high of 23,996. It may be coming back just to retest that area before it continues to go higher. Alright. But look, it left down here back in, what's that, 4/7, so April of this year, when the NASDAQ took off, put in its big bar on 4/9, just like the S&P, right? It never looked back either. It just took off and ran. And it started off at 16,460 and went all the way to 25,394. So that's it. Well, how much is that? That's what, 11 grand? So, man, if you're complaining about this little bit of a drop, if you haven't sold everything you had, maybe sold a little bit, or maybe sold your one share, you still walked away with at least 10 grand on that trade. So you got to take this all with a grain of salt. It's investing, and you should be, ringing the register at some point. Not selling all, you're not selling everything. I would say some of it. I don't know how many shares. If you only got one share, then hey, bye one share. You know what I mean? Because you got 11 grand to reinvest, or you can hold on to your one share and just keep it, let it ride, and see what happens. You're the CEO of your trading. So you do what you do. But I'm just pointing out the fact that if you're complaining about that drop, you're thinking too small. You should look at the bigger plan. There's a bigger thing going on here, not just that little 1 day pullback. All right, let's take a look at silver. Silver had already reached a new high and was already pulling back a little bit. So it only put in a doji on that Friday. So it really wasn't even, tripping about anything. It put in a doji, a little indecision bar. So it isn't sure if it's not even sure if it wants to continue to go lower or go higher. It ain't made up its mind yet on silver. Next up is the Dow. And the Dow, took some off, came back to retest this high that it blew through, most recent high, which was actually, if you look back here and here, it never retested this high. Did a retest here, now it's come back maybe to retest here, or it may come back down into here somewhere. We don't know for sure, but this is definitely a good support area for it. Now on the pre-market, it dropped down to about this area, and starting to slow down as far as the sell-off is concerned. So we may test this for some support, turn around and head back up. And if you new to the market, you're used to days like this. You'll see a day like this every so often where it'll just sell off, and the next day the market opens, it'll pop right back up and head back higher. And you done sold all your stock and you're mad at yourself because you jumped out of the trade too fast. So, and trust me, I've been there. I've been there, and but the thing is you got to protect your account too. So sometimes you got to cut it and get out of it, and take that little bit of a loss rather than a big loss, because you don't know where the bottom is. That's when when they talk about catching the falling knife. You don't know where the bottom is, so you're sitting there holding while this thing is falling. You're losing money, and then eventually you're going to get to the point where you're like, oh my God, I'm losing all my money. I need to sell this stuff, and you're going to sell it, take a huge loss, and then it's going to turn around and go the opposite direction. So unless you're investing in the company, that you believe in the company, and you're going to ride it for 5 to 10 years, then you need to cut it quick. If you're trading it, if you're investing in it, then you want it to be dollar cost averaging, picking up more shares as it gets lower. Best thing to do would be to wait when it looks like it's going to stop falling and turn around and start to head up. You see a green bar, now you want to buy a little bit. And then if that green bar gets taken out, wait for the next green bar, buy a little bit. Okay? Until you're sure it's turning around and heading back up. Alright? If you're trading it, trying to just, do some swing trade or a nice little, snipe, whatever you want to call it, then you're going to get out of the trade. If it's selling off when you get out. If you can't sit there and watch it, set your stop somewhere. If it hits your stop, be happy that it hit your stop and that you had to stop in there and it didn't just keep selling off on you. Alright. Let's take a look at some more of these. We got corn. Corn has been selling off anyway, so we already knew that was selling, so we weren't already going short. We should have been going short. Next up is going to be, let's take a look at Apple. Alright. So Apple was already retesting a recent high, or the most, I don't say the most recent, but retesting the high of $260. Apple was already retesting that $260 area, so for it to get rejected at $260 is no surprise. So this was already happening in the Apple. Alright, now where it was going to pull back to for some support, we'll find that out as it pulls back and finds some support. Most likely it's going to be around, I'd say roughly about $236 or so. But we don't know for a fact. We'll find that out when it does it. Then we'll put we'll check history and see if that's a good support area for it. Alright, but currently it was already had reached that a high that it had reached in the past and failed, and so it failed again at the same area. So No surprise there, right? And off that negative news on Friday. Archer, same thing, retesting highs. And it didn't really even sell off that much either on Archer. AMD, same thing. It gapped up anyway, so we had a gap on the AMD. So AMD sell off with this gap is a need to come back and shut that window anyway. Is it going to come back and shut that window? Maybe, maybe not. Who knows? But we do know there's a window open, so we kind of expected AMD to sell off. Amazon was already pulling back, so it was going back to retest this most recent high, and didn't quite get there, but it did pull back to the support area where you can load up with some more and take it on around and head on up with it. Okay, these are buying opportunities. If you haven't quite grasped what I'm trying to put down to you right now, these are buying opportunities, chances to get good stocks at a low price. Webull is a lot stronger. Positive news is good. Negative news is will affect it. Positive news will affect it. Negative news will affect it. Not like an Amazon or an Apple or say a Costco or something like that. Okay, where those are highly large molded companies, have a lot of other things that can help prop it up, that help hold that particular company up. Webull is basically a financial trading and things of that nature. And financial right now is like when I showed you on Bank of America, right? Financials getting hit. CSWC, one of my favorite, Capital Southwest, big time getting hit. We can look at more banks and see, where's my banks at? Oops, did I get rid of it? Probably got rid of it because, oh, banks. Look at all the banks. Alright, Liberty All-Star Growth, Bank of America, Cadence Bank, Carver Bank, Capital One, Every Holdings, I don't know what that's in there, but it didn't do nothing, but it hadn't been doing much anyway. That's GS, who's that? Goldman Sachs, JP Morgan. Alright, so I think you get the picture. Alright. So I think we were just getting a little sell off that was coming anyway. You know, so to think that, you know, what the president had to say on Friday is the reason why the market's selling off, I think it's foolish thinking, and you should keep your head in the game, and remember, look back so you can see forward. All right, because the past is going to dictate your future. So, on that note, like, subscribe, hit the notification bell, and be careful out there. These markets are crazy.